Welcome everyone to Pip Miners. I'm Movie Mark. So today I'm going to be looking at how to identify and confirm the uptrend and how to select profitable trades from the uptrend. Okay, I have the euro versus US dollar currency pair. And this market situation was carried out during the month of June, at some point in June. Okay. So at this point in time, we can see that the market is in a range. All right. So now we can see the trend kind of like moving upwards here. Now looking at the chart, just bare like this, it will be difficult to identify or point out if the market is in a downtrend or in an uptrend. So what you will first of all want to do is use some kind of moving average. So what I usually do is I'll bring on my moving average, my 200 simple moving average. You can see the bars are formed above the 200 simple moving average. That is a sign to us that the market is in an uptrend. Okay, so that will be our first sign. Now, how then do we identify or know when to enter and when not to enter? For us to do that, first of all, we have to know the basic features of the uptrend. The bars on your chart should have a certain form of movement, and that movement consists of swings. Now, these swings can easily be identified. One indicator we're going to need to identify the swings in this chart will be what I call the fractal. Now, if you look closely at the bars, you can see the fractals at work. There's one here. There's another one here. There's one at the bottom, and so on. So these positions are marked out for you by your fractals, and these symbolize or show to you the points of highest swings and lowest swings. So just at this point where the market breaks out of this range, at this point, we notice that it starts trading or trending upwards a little bit. So we're about to identify our uptrend now. The current high is supposed to be higher than the previous high. And from this was a previous high. And the next high is going to be this one. So you can see this high is higher than the previous high. So this is a high, this one is a higher high. Now look at the next high, it is higher than this high. So this is another higher high, and this is another high. This one is higher than this one. So you can see that as the bars are being formed, the highs are getting higher than the previous one. This is one high. And then the next high, this one, as indicated by our fractal, is higher than the previous one. And so on. The next high is higher than the next one. That is a clear sign that the market is in an uptrend. That's the first part. Now, the next part, we're going to consider the lows. This is one low. If you look at it, this is another low. This low is higher than the previous low. This one a little bit fell short, and this, so let's take it from here. This is a low, and then another low. This one is higher than the previous low, and then this one is higher than this one, and then this one is higher than this, and so on until you get all the way up here. So you can see consecutive lows, the current lows being higher than the previous lows, and on the top you have the highs the present high is being higher than the previous highs. For us to confirm, this confirms that we are in an uptrend. But if you really want to get more confirmation, you can use a trend line. That is another very important tool for identifying the trend. Like we said, the first thing you want to do is confirm the major trend with the 200 simple moving average. So the next thing we'll bring on is a trend line. We're going to draw a trend line across the screen. Let's just change the color of this trend line to black. Now we have our trend line. So all we have to do is align our trend line and line it up so that it matches our trend perfectly. So we're going to have two trend lines here. So for the first part of this trend, you can see that each of the lows find support approximately or exactly on the trend line, and once they hit the trend line, they bounce off and then they trend up. And so this confirms to us that the trend is still on, and none of these lower swings have been able to pierce through our trend line. So the trend is on. Now when the trend gets to this, when the market gets to this point, it even moves higher, far higher from our trend line at this point, leaving our trend line kind of lost at a lower position. So we're going to have to put in another trend line. Now notice something. Immediately the trend gets to this point, you can see it trends down. Each of these have been finding support on the trend line. Immediately it gets at this point, it gets to the trend line and then breaks the trend line by trading or trending, piercing through it, and then it goes down. At this point, the market seems to be suggesting to us that the trend is either coming to an end or it is falling into a range. So if you're trading, you just might want to be careful at this point where the bars break the support line. And to confirm this, what I like to do is bring in some other oscillators to help me confirm if the trend is actually reversing. A stochastic oscillator, let's use the default terms. Now just before I go on to explain how we can use this to confirm the reversal, at the point where the market starts trading, another way you can confirm if the market is about to trade up is for you to take a good look at your stochastic. So at this point where our trend line started from, when the market starts to trade up, if you look at your stochastic, you'll see that the stochastic is already signaling that the previous range is already fading out and is already being oversold. That's one signal. Another signal you might want to take from the stochastic is that the moving averages of your stochastic, you will find them at this point piercing through each other. As you can see here, you can see the red moving average piercing the black one, and then it starts to trade up. At that point, look at the market. You can see the market begins to trade upwards. So that's your signal right there. Now let's go back to what I was trying to explain. At this point where the trend pierces or breaks the support line as provided by our trend line, you might want to take a look at your oscillator, your stochastic oscillator. It is in an overbought position. That means the market has trended up enough, and the bulls are losing strength and momentum, and it's about to give way for the bears. So this might just signal a proper time to sell. Take a look at your oscillator. You can see the oscillator is already in the overbought position, and right now you can see the the moving averages of the stochastic piercing each other, facing downwards. So this is a clear signal at this point that the trend is probably going to reverse, or it's going to fall into a range. Okay, so let's scroll further and see what the result is. At this point, what you can see here is that the market falls into a range, and then the range goes on and on and on up until it gets to September 17th. So you can see this range lasted for so long, over a month. At this point, the market breaks down. Now take a look at the stochastic again. At this point, the market signifies to us that it is in an overbought position, and now it could be probably the time to sell. That's signal one, and you can see the moving averages of the stochastic piercing one another, facing downwards. And also you can see that our 200 moving averages is gradually being broken. The charts or the bars are no longer clearly above the 200 simple moving average. You are now digging into the 200 moving average, and at this point you can see them breaking with this bar, starting with this bar right here, breaking through the 200 moving average. Also at that point, take a look at the stochastic. You can see your stochastic is already pointing downwards, and it has crossed, and then the market trades down. Okay, so guys, this is just some way I identify the true uptrends, and then know when to enter from its early stages, and then know when to exit it when the momentum is weakening. I do hope you enjoyed this lesson. Watch out for our next lesson. We're going to be dropping how to identify the downtrend using some techniques that can help you. Okay, so if you're new to the channel, do make sure you subscribe to the channel. It's Pip Miner, and I'm your host. I'm your tutor, OV Mark. Subscribe to our channel, like the video, share the video, drop a comment in the comment section below. Whatever videos or whatever trading techniques or styles you would like to see, do recommend them in the comment section, and I will do justice to them. Until the next one, do take care and